Start investing in gold and silver at sdbullion.com today and join over 35,000 precious metals investors who have made the switch to the lowest gold and silver prices in the industry. SD Bullion recently claimed a spot on the prestigious Inc. 500, making them one of the fastest growing bullion companies in the United States. With low bullion prices and over-the-top customer service, SD Bullion is setting the standard for precious metals transactions. Visit www.sdbullion.com today. Start saving on every precious metals purchase you make.
The hyperinflation is in the bond market. The massive drop in interest rates truly shows that it's the end of an empire. And the reason I say that is the empire has gotten so bloated with debt that the only way to afford the interest was to crash interest rates.
Hey friends, welcome back. SGT here. Thanks so much for joining us, and thanks for checking us out for real news 24/7 at sgtreport.com. Of course, over on YouTube, and more importantly now on Steemit, where freedom of speech will prevail. I have on the line the one, the only Bill Holter from JS Mineset, and boy, do we have a lot to talk about. Bill, guess what? I now know what Google means when they say there is no room on Google for fake news. I figured it out. We'll talk about that in a second. How are you, Bill?
Good, Sean.
All right, so here is what fake news is. Are you ready? I know what they're looking for. They're looking for anything at all that challenges the establishment. Case in point, Emmanuel Macron, the WikiLeaks Macron leaks. The French media warned not to publish the Emmanuel Macron leaks just before the election. France's Electoral Commission warned media and internet users that they could face criminal prosecution for publishing documents obtained in a massive and coordinated hacking attack on the presidential frontrunner and Rothschild agent Emmanuel Macron's political movement. And the French media dutifully honored that threat. And let's look over here. Macron's tax evasion busted on 4chan, proof of offshore bank account. He's hiding millions and millions, and he's a Rothschild agent, and now he has won. Now he will lead France right down the toilet bowl, Bill. I guess that's fake news. It shall not be shared.
But did you notice something? Same thing with the Hillary, the Podesta, all the other hacks. None of it has been denied as being fake.
That's right, and WikiLeaks has never been indicted for releasing anything that wasn't the real McCoy.
Right.
But you know what, Bill? The truth cannot be shared with the people, and in fact, it's so totalitarian now, globally, that France can threaten its citizens and journalists. Don't read it. Don't look at it. He's our guy. We're going to select him. The Rothschild agent will lead you.
And if you publish it, you'll go to jail.
Yeah, I don't think there's a better example of Big Brother tyranny than that, is there? I mean, this is truly the Twilight Zone. Of course, that's France. But the same thing's rolling out here. It was in November of 2016 that CEO of Google Sundar Pichai came out and famously said this.
Just in the last 2 days, we announced that we will remove advertising from anything we identify as fake news.
And ever since, things have changed. They've only been going downhill on YouTube and, of course, in Google search results, as they have literally changed their algorithms to filter out what they deem fake news, which is exactly what I just explained. It is the real news, it is the truthful news, it is any information that is threatening to the establishment.
Well, it's like a massive book burning. That's the only way to describe it.
It's a digital book burning, that's right.
Yeah, I mean, the truth cannot come out in front of the people, because then all of these fake narratives are blown up.
Well, that's right. And, the other piece of truth that I want to share with everybody, and you tell me if you agree or not, I've discovered where hyperinflation is going. I've discovered where the inflation is in the system here in the United States, Bill. Do you know where it is?
Healthcare.
Healthcare, and in the Dow and the S&P specifically,
right, of course.
These tech stocks. Amazon trading at what, $800, $900 a share? You tell me that's not hyperinflation, Bill. My understanding is that 10 companies now account for 50% of the S&P 500 returns this year alone. And we have David Stockman warning that a fiscal bloodbath is coming this fall. He's calling the market insanely overvalued, insanely valued, and the greatest suckers rally we have ever seen.
Well, that's where I was going to go next. I was going to suggest to you that the hyperinflation is in the bond market. And that's why you saw or you see interest rates as low as they are all around the world, because the capital has been forced into the bond markets. I had a thought, and may write about this shortly, but the massive drop in interest rates truly shows that it's the end of an empire. And the reason I say that is the empire has gotten so bloated with debt that the only way to afford the interest was to crash interest rates. So they've had to create this bond bubble, this hyperinflation in the bond market, if you will, to force rates lower to continue the game, to be able to actually just pay the interest.
Well, that's right, Bill. And of course, in many parts of the world now, they've introduced negative interest rates. Who would want to buy a bond that guarantees you a loss of 1% a year, Bill? That's where a lot of the world's headed.
Well, that's where the world was headed. That was the fear last year. And I wrote on this extensively, negative interest rates basically is like a snake eating its own tail. It cannot last because the system would basically eat itself up. The only logical reason to accept negative interest rates is if you think that the currency is going to be worth more at a later date and you're afraid of losing your capital between now and that later date when you're going to get paid in currency. And it's truly a joke, because if you look at what they're doing with the money supplies, we know that they're anything but finite or shrinking. The money supplies have been exploding and diluting the dollars, the euros, the pounds, the yen, et cetera, et cetera.
Yeah, I'll tell you this. I just called up Amazon because I mentioned it earlier. The stock is trading, get this, guys, $943 per share. And I was trying to figure out what the market cap of the company was, Bill, here at Yahoo Finance. And ironically, it says market cap 0. Maybe that portends where the stock is headed here in the near future when things melt down.
But forget about price, Sean. More importantly, for companies like that, look at price to earnings ratio. In the financial industry, look at price to book. Look at price to real book, not price to them marking their bonds marked to fantasy.
Yeah, that's right. Well, in the case of Amazon, the PE ratio is 177 according to Yahoo. So, nothing to worry about there. It'll just keep going higher. The first year estimate, they're saying the 1 year target estimate, according to Yahoo Finance for Amazon right now, is $1,092. So jump in at $943. Don't worry, it's only going higher.
Right.
Well,
177 times earnings basically tells you through earnings, if you invest $1 today, it'll take you 177 years to get that dollar back.
Well, more importantly, I just heard a statistic the other day. I suppose Amazon could buy up all of the silver mining companies on the planet, and probably Apple, with its stockpile of cash alone, I've heard that they could buy up every cryptocurrency out there, including Bitcoin, and still have money left over. They could just buy up all the cryptos with their cash on hand.
Right. Well, they could buy up the entire mining industry, gold and silver, with the cash on hand.
All right, so we've really hit a theme here. The theme is that hyperinflation exists, but all that money is in the stock market driving these prices of some of these stocks to nosebleed levels.
Right. Sean, I do want to make mention, we actually had 17 down days in a row for the COMEX gold close.
I know we did, and you know what? I want to jump in and say this because you commented on that in your article, why you shouldn't wear a nose ring. And I think what's really important about that article, Bill, it motivated me to go and check for the historical data on this. And get this, it was July 22nd, 2015 that CNBC wrote an article about gold's 10th straight day of declines. And of course, your article was about 15 straight days. That was the longest losing streak in 20 years. The last time it happened was when gold fell 13 days in a row in 1996 between August and September. So
right.
These bastards, these criminals over at the COMEX and behind the scenes have been killing gold, what now? Well, how many days down was it? 15 when you wrote that article.
It was 15 when I wrote the article. The streak ended yesterday. COMEX was up yesterday, even though the cash market was down, and that is just a function of the timing of when COMEX closes versus the cash close. So it was 17 days. And I checked with Jim Willey, as he's a statistician, and 17 days, if you flipped a coin to come up heads or tails, in other words, either up or down for the price of gold, and forget about the potential where it ends unchanged. But if you flipped a coin, for it to come up either heads or all tails 17 days in a row, it would take 131,000 tries to do that. Now, if you assume that there's 250 trading days per year and you discount that backwards, oddly enough, if you do the math, it's 524 years. It goes back to 1493.
So what you're saying is there may be some manipulation in the system.
Well, there's been, you've known it. It's been proven time and time again that yes, there is manipulation. But what this shows is that they're absolutely blatant at this point. They don't care how many standard deviations they have to go to keep gold in line. Look at the lack of volatility in the stock market. The lack of volatility. You've got a VIX under 10. I think yesterday or the day before, I think it was at an all-time low. And VIX is supposed to be a measure of risk. And fundamentally, we're at an all-time high for financial risk.
So gold should be going higher because it's a hedge against catastrophe, but the market is telling all the sheeple that everything's fine.
Exactly.
And the gold price, because it's manipulated by the powers that be, is telling everybody that everything's fine. And
right. And it's been that way for, just go back to, it really kicked off in 1996. And it's truly to protect the dollar. Gold is the direct competitor to the dollar. So if you can knock gold down, you can prove or you can show gold is bad, the dollar is good. And that's what this is all about. This is about dollar hegemony. It's all about the issuance of U.S. treasuries. It's about the dollar and the treasury market.
Right. Right. Well, meanwhile, the cryptos are also where hyperinflation seems, well, at least the suggestion of hyperinflation exists, right? So if gold and silver were traded freely in a free market and were able to obtain their real world value when priced in dollars for all the outstanding dollars and euros and yen and everything else on the planet, gold and silver, in my opinion, should be behaving more like the cryptocurrencies. I imagine by the time we air this interview, Bitcoin could be at 2,000 or even higher. So right. What are the cryptocurrencies telling us? That's what I keep asking my guests. I think they're telling us a very important narrative.
Well, they're telling us a very important narrative because the powers that be cannot borrow cryptos to sell short. They also can't sell them naked short. So they can't. They're less able to be manipulated. They're less able to have the supply diluted by fake paper contracts. Yeah, so they're telling you the true story. There is a hyperinflationary event that's occurring now.
That's right. There's going to eventually be a total of 21 million Bitcoins in circulation. Right now, I believe there's somewhere in the neighborhood of 16 million Bitcoins in circulation. Ethereum is on the rise. Litecoin is on the rise. All of the cryptos are either hitting new all-time highs or reapproaching new all-time highs. And the story on the cryptos is an interesting one because you're right. They cannot be manipulated on the COMEX by the Wall Street bankers, right? There's a finite supply, and the bankers can't get their, well, more importantly, the bankers can't print into existence more fake shares or more fake Bitcoins. They can't do it.
Right, and it's important to understand that real gold and real silver are also a finite supply.
Well, that's 100%
And
right.
that's the key here, is that through COMEX, through LBMA, through derivatives, gold and silver, their supply gets diluted. I mean, how many times have we seen $2 billion worth of gold or $2 billion worth of silver hit the market in a 5 or 10 minute period of time to smash the price?
Well, and you know what Craig Hemke over at TF Metals calls that, right? He calls that phantom metal.
Right, and he did a great report, by the way. I think it was about 2 weeks ago. I would urge everybody to go to Craig's website and read that article, or you might post a link to it.
Yeah, was that Econ 101?
Basically, it showed the nuts and bolts of how silver is manipulated.
Yeah. Yeah, and basically he says the beauty of what the scheme and the scam is there over at the COMEX and the bankers is they will meet demand with endless supply.
Right.
That they just create out of thin air, and that gets me back to the cryptos. They can't do that in the cryptos. So when people say the cryptos are in a bubble, well, that may be true, but the bubble is being caused by all of the fiat dollars that need to go somewhere. So they're going into a space that cannot be endlessly manipulated like precious metals can be, thanks to the criminality, which leads me to my next question, my other topic. I want to ask you about the LBMA, where there is a big shakeup. On March 3rd, 2017, news broke that CME Group and Thomson Reuters are stepping down from providing the LBMA silver price benchmark auction, better known to our listeners and those of us who are informed as the Silver Fix. What is going on at the LBMA? I asked the same question of our friend Mike Maloney, and he believes that where there's smoke, there's fire. There's probably no metal in that vault.
I agree 100%. There's obviously something going on behind the scenes for them to step down. If it was profitable for them to stay, they would keep sweeping the profits off the table. But if this thing's going to blow up because the metal's not there, they don't want to be there when it blows up.
Well, here's the problem, Bill. We've been talking about the blow up for a long time, and it seemed like we were going to get a nice run in the mining stocks last year when the juniors, the GDXJ and the GDX were on quite a tear. I mean, a huge tear. We saw companies like First Majestic go from $4 or $5 a share up to $20 a share. Now everything's pulled back, and now many of those stocks have pulled way back. But meanwhile, there appears to be a tremendous demand for the GDXJ. I just talked to Eric Sprott about this. There's a rebalancing happening at the GDXJ because of demand, because there's so much interest in that product that the GDXJ had to continue to buy more and more of these companies until they were finding themselves in ownership of, in some cases, of 20% of the companies,
right,
which caused regulatory issues, and now they're having to sell some of those companies to rebalance. To me, that speaks to the real-world demand for precious metals that Wall Street, or at least the powers that be, don't want people to pay attention to.
Right. I mean, it's similar to the ETFs, GLD and SLV. Those were used as a pressure relief valve, if you will, to divert demand into paper as opposed to physical. And I think that's in some manner what's happened with these ETFs, because they have not gone out and actually purchased each and every share. I mean, there are contractual obligations, but they're contractual obligations. They're not actually going out, and the demand has been diverted, in other words.
That's right, and that's another thing we don't see in the cryptos. At least to this point, there is no ETF or other vehicles created by Wall Street to try to siphon off some of that demand. Because you're 100% right about GLD and SLV. And who are the custodians of those ETFs? Criminal banks. What, JP Morgan and HSBC?
Exactly, the foxes guarding the henhouse.
Yeah, all roads lead to the criminal banks. I mean, literally, guys, all roads lead to the City of London, to Wall Street. Again, Emmanuel Macron. He worked for a Rothschild bank.
Right.
WikiLeaks spilled the goods on this guy's corruption, about his lies, and the French media was told, stand down or you'll go to prison. And then he becomes the president of France. It's insanity. This is absolutely the Twilight Zone, or another Rothschild puppet.
Hey, Sean, one area we should talk about is it really does look like there's a credit event beginning to happen in China.
Well, actually, that's interesting you'd bring that up. I talked to David McElvaney recently about what's going on in China, and the bubble may be ready to pop. Something bad may be unfolding in China right now. Do you want to talk about that a little bit? What do you see?
Well, you can see the commodity carnage. You can see their markets in forced selling mode, and basically, just call it a margin call, if you will. There were stories last year and even the year before in several of the metals contracts, not the precious metals, but the iron ore, copper, etc., where inventories were pledged 10 and 20 times over, so that the amount of credit piled upon the inventories, there's no true chain of ownership. So it's a big problem, and it's size-wise, it's gigantic.
Well, you mentioned a very important term, margin call. When the markets start to topple, and we've seen this happen before, this can happen very, very quickly. In fact, you might remember the day, I don't remember, was that around 2010, 2011 when we saw, I think it was a 1,000-point drop in the Dow intraday? There was a giant drop, and then I think it bounced back and finished the day down 500. But if we go back to 2008, when these corrections start in earnest, the sell-off often seems coordinated. It almost seems like the Rothschilds hit the red button, and down everything goes, and it goes fast, and it's vicious, and it's ugly, and it can last months. The 2008 correction was absolutely gut-wrenching, and people think that can't happen again. People are actually brainwashed into believing right now, because of the Dow and the S&P and the Nasdaq over the past several years, that can't happen again. And that's always really scary, because it's not the new. Things always revert to the mean, Bill.
Well, Sean, in 2008, we were literally hours away from the system seizing up, because banks were not settling with each other, because banks and brokers didn't trust each other. It reminds me, the very first class I had going to college was economics, and the first page of the first book, and I guess it formed my mindset to dig into things. It said, we don't know why the Great Depression happened, but we do know it can never happen again. And relating to 2008, what is coming up is going to make 2008 look like a garden party, and the markets will overwhelm. The central banks are at this point simply too small, because the system has more than doubled again from 2008 as far as outstanding credit, derivatives, etc.
It was about September 15th. Here's the facts, and we don't even talk about these things. On Thursday at about 11 o'clock in the morning, the Federal Reserve noticed a tremendous drawdown of money market accounts in the United States to the tune of $550 billion was being drawn out in a matter of an hour or two. The Treasury opened up its window to help. They pumped $105 billion in the system and quickly realized that they could not stem the tide. We were having an electronic run on the banks. They decided to close the operation, close down the money accounts, and announce a guarantee of $250,000 per account so there wouldn't be further panic out there. And that's what actually happened. If they had not done that, their estimation was that by 2 o'clock that afternoon, $5.5 trillion would have been drawn out of the money market system of the United States, would have collapsed the entire economy of the United States, and within 24 hours, the world economy.
People don't realize that literally what you said is absolutely correct. We were essentially hours away from the death of the dollar. And again, it speaks to what I think was a coordinated attack, Bill, a globally coordinated attack, probably from the City of London, against the dollar. And ever since, it's been print, print, print. Everything for the banks, right. Nothing for the people. That's what happened in 2008.
Right. And when this does happen, and I've said this time and again, it's going to be very, very quickly. It will happen, probably won't take more than 48 hours to occur. So you're going to go to bed one night and more than likely over a weekend. You probably go to bed on a Friday night and wake up on a Monday and market's not open. And at that point, you have what you have, and that's it. The numbers that you have on your either printed statements from your broker or your bank, or on the if you look up your accounts on the internet, they're useless.
Well, and I think just to back you up here, you said this could happen overnight. We've heard this before from you. We've heard it from others like Jim Willey. We've heard it from others that it could happen in a matter of hours or just a couple of days, and that sounds implausible. Let me play that clip again from Representative Paul Konjorsky, who said, in just a matter of hours.
Their estimation was that by 2 o'clock that afternoon, $5.5 trillion would have been drawn out of the money market system of the United States, would have collapsed the entire economy of the United States, and within 24 hours, the world economy.
The United States was almost brought to its knees.
Right.
So, Bill, if it can happen in just a matter of hours, what in the world would people do to protect themselves? It's too late to sell at that point, right? It's too late to get your paper assets out of the bank or out of Wall Street. So
Exactly.
what are people to do to protect themselves from that worst case calamity? I mean, is it precious metals? I mean, it's not precious metals on Wall Street. It's not paper metal. What is it?
No, it's real precious metals. It's physical metal, either vaulted in a non-bank vault or in your own hands.
So
it's wealth that you're going to carry from this system to whatever the next system looks like whenever it comes up and running. They're real money that will carry your wealth from the current system to the next system. And the current system is mathematically going to come down, and that is easily provable. You just look at the amount of debt outstanding versus the amount of interest that is accruing. It can't be paid back. The world has become a banana republic.
That is actually a good title for this video. The world has become a banana republic. That's true, and I think it's true both in terms of justice and rule of law, and it's true in terms of finances and monetary policy. The world is out of control.
And Sean, if you want to actually see the mathematics behind it, Lawrence Kotlikoff has done the mathematics on this, and well, even David Stockman. Mathematically, it's going to come down. It's not a question of if, it's when.
All righty, Bill. Well, you know, our listeners are well informed about all of this stuff, so hopefully people will get this into the hands of folks who are not well informed and who actually believe the stock market can and will only go higher. Bill, I really do appreciate your time and your voice, so we'll get this released as soon as possible. Any final words for us before we lose you?
Yeah, before you go, Sean, and I know you're right in the middle of this, it's obvious that Google et al. Are trying to silence the truth. And obviously one way Google's doing it is through their YouTube channel. I know they've cut you off, they've cut other people off, trying to squeeze them out so that the channels collapse and they are no longer. So I would just urge anybody who's watching this, anybody who watches YouTube videos, to get alternative media, to get the real truth. Send $5, send $10 to your favorite channel. Don't let them shut down, because if these channels get shut down, then the only thing you've got is CNN, MSNBC, ABC, etc., etc. That's real fake news.
Yeah, thanks for that, Bill. And you're 100% right. You know, the people out there that are trying to share real news and truthful news that are being labeled by Google as distributing fake news, what I've determined about this attack by Google and YouTube is that it really is a coordinated attack. And I wouldn't be surprised if we later learn that this all was hatched. It was a plan hatched at a Bilderberg meeting a year or two ago, because this is a coordinated attack, including the corporations, who, by the way, a point I made in my last video, are more than happy to advertise on shows like Fox's Lucifer, which is most certainly offensive to Christians. So when they say they don't want their ads appearing before, in front of, or during objectionable content, not only is that just very subjective, number one. Number two, it's completely a straw man, and that straw man is being used to turn off and shut down truth channels so the old media, the legacy media, can come into YouTube and take over?
Hey, Sean, just like the WikiLeaks revelations, nobody has ever challenged them and said, "Oh, they're made up, they're fake." It's the same thing with these alternative media channels. Your channel, Greg Hunter, X22, go right on down the line. They cannot challenge the logic behind what your guests are coming up with. So the only alternative is to silence them.
Well, that's true. And the problem for them is that we deal in facts. So most of what we talk about, of course, sometimes there's some conjecture. Sometimes we have to guess about what's going to come next. But generally speaking, we speak based on historical facts, right? The Federal Reserve was hatched in private, and it was a conspiracy to take over our monetary system and give it to the private banks. That's a fact. You're not going to hear that discussed very often on CNBC, and if a guest brings it up, they'll quickly end the segment. So that's why we exist, and I just want people to know how appreciative I am. Many folks, Bill, have done what you've suggested, and they're supporting SGT Report by going to Patreon and signing up, pledging $1, $2, $5 a month, and we very much appreciate it during this time of tyranny as Google literally changes the rules in the middle of the game, changing their algorithms, changing the rules and the regulations at YouTube to shut us down. That is what they're doing, and we're not going to go quietly into this. Good night. We're going to fight. So my thanks to Patreons. I also want to say SGT Report is now on Steemit, and I think it is a huge, huge opportunity not only for creators, but for readers and viewers alike. Check out SGT Report on steemit.com. And, of course, you can check out Bill Holter's work at jsmineset.com. And, Bill, you know how much we value your time. Thank you for joining us today.
Thank you, Sean. It's my pleasure.
All right. And guys, thank you so much for checking us out at SGT Report. You can check out our health store at survivalmode.us. And again, check us out at steemit.com. It's a great alternative to YouTube. Guys, thanks so much for tuning in and have a wonderful week ahead. God bless.